Hey, welcome back. It's Nolan Mathias, and today we're talking about all the costs associated with buying a property and getting a mortgage in Canada. Everything from the smallest cost to the biggest, and I think you'll be surprised at what the biggest costs are when it comes to buying a property. And if it's something that you aren't thinking about early on, it can definitely come back to haunt you, and I'll tell you what that is at the very end of this video, so stay tuned to the very end to see that. But before we get into it, for the most honest and transparent information in the industry, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 10,000 subscribers, where one lucky subscriber is going to win their mortgage payment or rent payment for a month just for subscribing to this channel. Okay, so let's get into it. Let's talk about the cost of purchasing a property and getting a mortgage in Canada. Now, some of these are going to apply to you, some of them aren't, but at the end of this video, what my hope is that you will have a full understanding of what the potential costs are of getting a mortgage and buying that property so that there are no surprises. And let's start with GST, because GST is something that most homeowners and most home buyers aren't going to get affected by. However, in the event that you're buying a new home, you will have to pay GST. Now, there are GST rebates out there. In order to find out what they are and what the current information is, go ahead and Google that. But if you are buying a brand new property, know that GST is something that you're going to have to account for. Now, it's going to be included in the purchase price of the property. So in a lot of cases, you aren't going to be out of pocket for it. It just makes up the total value of the property. But know that buying a new property costs a little bit more than purchasing one that has already been lived in. Now, the second cost associated with getting a mortgage in Canada, and this is for people who are putting less than 20% down, and it can be the single biggest cost for most homeowners, is mortgage insurance or default mortgage insurance. And what default mortgage insurance is it is protection for the lender when somebody is putting less than 20% down in case you don't pay your mortgage. Because if you're putting less than 20% down and you end up not paying your mortgage, it's probably because the value of the property has gone down and something has happened in the economy. So what mortgage insurance does is it protects lenders from the eventuality of not being able to foreclose and sell the property in order to make their money back. Now, this is an upfront cost that you pay for. However, it is typically added to your mortgage, so you aren't out of pocket for it. So if you have basically a $350,000 mortgage and $10,000 in mortgage insurance, you end up with a $360,000 total mortgage, and basically your payment just goes up by $45 per month in order to pay for that mortgage insurance. Now, once you've paid it, you can't get it back, but mortgage insurance is portable. So if you purchase another property in the future, you can potentially move your mortgage insurance from the property that you bought now to a new property down the road. Now, the third cost associated with buying a property and getting a mortgage is legal fees, because you will need at the very least a title insurance company to make the transaction happen for you, or a lawyer. And those fees can range anywhere from $500 to $2,500 depending on where you are. And typically it is a higher cost for a higher value property and a lower cost for a lower value property. We always recommend that when you go to purchase a property or get a mortgage, that you call 2 or 3 lawyers around town and get quotes to see what they're charging. Don't go necessarily with the cheapest one, but go with the one that has the best combination of a great reputation and a good cost. Now, in the event that you aren't getting mortgage insurance because you're putting more than 20% down, well, often you are going to end up having to pay some sort of an appraisal fee. Now, there's 2 types of appraisal fees. There's automated appraisal fees, which typically cost between $70 and $100. And basically the lenders use the insurer's systems to basically bounce the value of the property that you're buying off of their valuation systems and see if the value makes sense. If it doesn't, they'll send out a normal appraiser. And if it does, you basically get charged $70 to $100 and it comes off of the mortgage at the beginning. Now, the second type of appraisal is a full appraisal, and these cost anywhere between $300 and $500 depending where you are in the country. If you're buying an extremely high-end property, they can be even higher than that. And what a full appraisal does is has an appraiser actually go through, take pictures, measure the property, and make sure that the value of the property is 100% what it is supposed to be. Now, a lot of people, when they get the bill for an appraisal, they go, oh, that's a huge cost. But when you compare it to a $10,000 insurance premium, it really isn't. The only difference is an appraisal is typically not something that gets added to the top of the mortgage. Now, in most cases, if you've got 20% down payment, you can afford the $315 to $500 to have the appraisal done, but know that that could be a potential cost for you if you are making that bigger down payment. And again, that's all to do with making sure that the lender knows the value of the property, and that eventually down the road, if for whatever reason you don't make your payments, that they're going to be able to get their money back by foreclosing and selling the property. Now, in every province but Alberta and Saskatchewan, there's what's called land transfer taxes. I'm not going to go into that in great detail in this video, but just go and Google your province and land transfer tax to find out what they are. They can range anywhere from 1% to 2%, and they can be quite a substantial amount of money depending on where you are in the country and what type of property you're buying. Now, in Alberta and Saskatchewan, there are land transfer fees, but they are considerably less than a land transfer tax, and they are purely for the purposes of paying for your title to be transferred from one person to another. Now, obviously, when you go to purchase a property, you need to have some sort of insurance. Typically, fire insurance is mandatory if you're buying a house. If you're purchasing a condo, you aren't necessarily required to get insurance, although we highly recommend that you get some sort of condo ownership content insurance, because if you don't have it and something happens, or if something happens in your property that affects other units, you can be on the hook for the deductible of the condo corporation's actual insurance policy, or for the cost yourself, depending on what happened. So make sure that you always have some sort of insurance, whether you're buying a house or buying a condo. You want to make sure that you're protected. If there's a single takeaway from this entire video that I want you to take away, it's to make sure that you have insurance. Don't think that just because you're buying a condo that you're covered. You want to make sure that your contents and any negligence or any damage that you may cause or may be deemed to have caused is taken care of. Now, another expense is moving costs. Now, this can be as little as nothing, zero, if you do it yourself, to $1,000 to $2,000 if you get professional movers. We find that a lot of people these days are paying the cost of pizza and beer for their buddies in order to move, and that's a pretty budget-friendly way to make a move. However, if you own a big property or you have a lot of things or a lot of valuable things to move, you definitely want to consider professional movers, because once you start to accumulate things, once you've been living in a house, it becomes a pretty big pain in the butt to move them yourself. So having professionals who can lift those heavy things and get things from point A to point B without them breaking, and can stack a truck, because you wouldn't believe how hard it is to make sure that everything's stacked in a truck in such a way that it isn't going to break. Well, that's worth every single penny for a professional mover. Now, if you're buying a condo, you're going to have condo fees. You want to make sure that you know what those are up front and make sure that they're accurate. Condo fees cover things like maintenance expenses, cleaning, snow removal, and landscaping of the property. And then in certain provinces, what's called a reserve fund, which is basically the amount of money that is put aside by all the condo owners for future needs and future renovations and future maintenance of the property. Now, when you're buying a home, you're also going to want to make sure that you get a home inspection done, because home inspectors are worth every single penny. They typically cost between $350 and $500, and they're able to find the things in a property that you may not recognize are a potential issue. And a lot of them nowadays carry infrared cameras so they can find leaks that wouldn't otherwise be visible. They know their stuff when it comes to hot water heaters and when it comes to furnaces and lifespans, and they can potentially save you a ton of money down the road. And they can also be used as a really great tool to help negotiate the price down if there is anything that is found to be wrong with the property. Now, if you're purchasing a rural property or an acreage, you may have a septic or a well inspection that needs to be done. Sometimes that is paid for by the sellers, sometimes it is paid for by the buyers, but understand that it could be a cost associated with purchasing the property. You could also have to pay a survey fee. Now, typically, at least in Alberta, survey fees are paid for by the sellers. It's what's called a real property report, and it's part of the Alberta Real Estate Association's contracts. I'm not sure about the rest of the country, but at least here in Alberta, that is the responsibility of the sellers. Now, that is as long as you're buying a property that is not being sold as is, because if you're buying a foreclosure or a bank-owned property, then all of those costs are basically going to be the responsibility of yourself. And same thing with condo documents. In most cases, that is the seller's responsibility. However, if you're buying a bank-owned or foreclosure, that could end up being your responsibility. It all comes down to what's in your purchase contract. So consult your realtor on that. Now, the second to last thing that you're going to have to consider when it comes to purchasing a property and the costs associated is the property taxes. Because in a lot of cases, the previous owner may have already prepaid taxes. So what you're going to have to do is you're going to have to pay them back for those. And the lawyers will take care of calculating what you owe the seller if they prepaid the taxes, but know that there is a possibility that you may have to come up with money to reimburse a seller for taxes that they've already paid. Now, at the beginning of this video, I told you that I would cover all the costs associated with purchasing a property, and I would tell you at the end what the single biggest cost that most people don't even realize is something they need to be thinking about is, and that is dun, 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 the bank's penalty. Because when you go to purchase a property, depending on the mortgage you get at the beginning, you are either essentially agreeing to pay an interest rate for an extended period of time or a penalty should you decide that you want to make a change. And 60% of Canadians actually don't make it till the end of their term when it comes to getting a mortgage. So if you're getting a 5-year fixed mortgage at a big bank, the single biggest expense you're going to have in all likelihood, and there's a 60% chance of this, so 6 out of every 10 people are going to get stuck with a penalty, is the mortgage penalty. So you need to be thinking about the long-term strategy when you are getting your mortgage and buying your property and making sure that you're minimizing your risk for a penalty, because the single fastest way that somebody gives their equity back to a bank when they go to make a change to their mortgage or when they sell their property is through penalties. And by the way, the single easiest way to avoid giving your equity to the bank is to always take a variable rate mortgage. We are a huge believer in those. I'll link to a video on a strategy on why I think that variable rates are the best strategy going forward. But know this, that you pay a premium for a fixed rate mortgage and you also pay a major penalty if you ever want to get out of one. So if you found this video useful, if you found the information honest and transparent, which I believe it is, then do me a favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. Don't forget about our race to 10,000 subscribers. And last but not least, this YouTube channel is made possible by our mortgage brokerage, Mortgage 360. So if you're finding this information useful and you're in the process of getting a mortgage or buying a home, please consider us for your mortgage. We can do mortgages across Canada, either through licenses that we hold in multiple provinces or through industry colleagues that we know across the country. So please, please, please do us that favor and consider us for that mortgage. We'll see you on the next video. Hope you enjoyed this one and have a great day. Cheers.